TGIF Warriors, we made it. Same to you, AJ. How are you? Blake, Brand? I thought you were going to tell me, buddy. All right, K-Man, how are you? Great gold trade. Hugo, Ryan, great gold trade on the stop in. Laura. Okay. Hi, Ingmar. So, yeah, big day, getting some follow through in gold as well on this breakout. Silver way outperforming. Look at this. That's a gold silver ratio. Just one thing I want to point out. I'd start being careful about playing the short side of US dollar yen on multiple time frames where diverging. See, higher, low, higher, low, maybe 1, 2, 3. You know, I don't usually expect big turns on Fridays unless we have the NFP, but I'd be careful about working the short side. Yeah, you know what's interesting? Okay, so here's 4 hours. And then you could also look at the daily, same thing. So, you know, when you look for divergences, it's best to have it on more than one time frame, the daily, 4 hour, and even better if you could get it at Ryan's time frame, which you are getting. So be careful being short the yen. You guys, someone just said dollars giving up gains. What I find interesting about the dollar, and what a tepid weak rally, tip of the hat to Grega, saying that the dollar is going to be flat and not get to, well, the preferred count wasn't 102.50, which was what I was looking for. But if you look at it right here, it's an inside week, you know, ready to attack the 200-week moving average. So I would have preferred to see it. Maybe it still does not be an inside week. The reason is inside weeks can lead to outside weeks. So, you know, if we start off lower next week, take out this week's lows, and then start turning, you might still get a rally back above 102. So, just some things to consider. So, why don't we start off with Ryan? Ryan, nice gold trade. Are you convinced about not a bad week in euro, that the 110 level was it and you could be long against it? Actually, cable looks even better. It only got back to the 9-week moving average 130. They all held where they had to. Aussie giving it back, I guess, a headline of China stocks making new lows. So maybe that's part of what's happening in Aussie. And Canada's still being stubborn. I know, you know, they rejected it from the 130 above 136. But you know what? That almost looks like a flag to me. So that's another reason to be careful also about just launching dollar shorts with an inside week. You could always get short again next week and see how it develops. So, Ryan, your view on Euro USD,
Yep,
was
sorry,
that
mate.
it? Was that an important low that you could just buy a pullback and know you're wrong under 110?
Yeah, well, I brought it down into 110 when it got there.
Yeah,
It was a big enough level as we've been speaking about,
yeah,
and I was a little bit nervy over the ECB. We were trading, 14, 15 pips
yeah,
above it.
right in here.
You don't want to be that close to a level when over an event like that, but it survived. We had to wait for the options to expire, all those 12 billion to expire, and then it's moved in the right
Oh,
direction.
oh, so they kept it pegged until the expiration midday in the U.S. and then,
Yeah, close enough.
uh,
Yeah, it just held back a
yeah,
bit, and then once that was out of the way, and
yeah.
obviously overnight,
Once they collected all their premium from call buyers, then they let it
yeah,
go. Is that what you're saying?
exactly. Yeah,
Okay.
yeah, probably, but
What a great game that expiration poker is, isn't it?
yeah, it
Um,
is exactly poker. But
yeah.
I can't claim a win on the gold. I had the plan right, and I completely cocked the trade up. I messed it up.
Okay,
Uh,
hold it. I see it coming across Reuters right now. Ryan is human. All right. You
Yeah.
know, sometimes we trade like trading gods, but we're human. Okay. So,
Sometimes,
yeah.
sometimes we trade like monkeys in the jungle.
Anyway, you know, you don't get that kind of transparency. You know, most people would skip over it, or pretend they never said it. Revisionists, I call them.
Yeah. Well, I can only do the next best thing and congratulate those who were on it, and
Yeah,
point to the lesson that people should take from that moving gold. You know, when you get these big levels that hold time and time and time again, you've got to know how to trade them.
yeah,
You know, I knew it was going to be explosive. I mucked up the
yeah.
trade, but you know, when you get these big breaks, there's money to be made. And
Okay, so I mean, Ryan was comparing this to when he bought the S&Ps at 48 on a stop over 4,800, and we all know what happened once we took out that 4,800 level, and that was good for 800 handles, I believe. So that was
yeah,
wait, this is what he did here. Okay, it was the same thing, prior record high, boom. So you know what the point really is, Brian? You don't have to buy the lows or sell the highs to, you can go with important breakouts and
yeah,
wait for the market to prove itself.
exactly. Let
But
the price do its thing. You know, you build
yeah,
up the evidence. You know, it's the same old patterns. You know, if you tap a level too often, it's going to break at some point. And the more times it resists or supports at a level, the bigger the stops build up through it, and the more violent the reaction is if you get a break. But yeah,
yeah.
I mean,
I mean,
yeah,
go ahead.
go on, mate.
No, go ahead. All I was going
Yeah,
to
so
say,
yeah, you know, going back to gold, you know, the dangerous part, as I mentioned on the flow show now, is what people do after it. You know, if you weren't long, if you didn't catch the long, you probably flip into the other side and thinking, where's the top to sell? You want to get short, and you can't do that yet. You've got to wait until the picture develops a bit, just like it did on the S&P when with that break. You know, you have to wait and see where resistance comes in, where support comes in above the break, and you know, have a bit of patience before you start trying it again.
yeah, they lit up the miners yesterday. I mean, here this was the day before yesterday. Look at that.
It's funny because there's been a bounce in commodities. Oil's up a bit as
Yeah,
well.
natural gas really
Yeah.
had a
So
great
you
week.
know this, even though we've had a big dollar sell off, and when we had a big dollar sell off, you know, your yields coming off, the dollar getting sold, commodities dropping, growth worries. Now we've had a little bit of a turnaround, but you know, it might just be a bit of a snapback, dead cat bounce because nothing's changed with the fundamentals. So
Okay.
yeah, things like oil and a little update, and but you just got to be careful how far it bounces.
Yeah, and you could be misled by signals because you tell me if last Friday, before we had this, and we closed at the lows, that you would get that kind of week this week
Yeah,
when you went home. I mean, what a
it's
difference
surprising.
a week makes.
Very surprising. But here we are, S&P. That's
Yeah,
setting up for a potential break. You know, we've got a big high point up there, multi tests.
yeah, yeah.
You know, so I'm looking at the same for that as I was for gold, and I hope I won't muck it up this time.
The breakout that you played, if you considered the whole, width of the formation, I've talked about it before, measure 6,100. That looks doable,
Yeah,
um, doesn't it?
it's still constructive. You know, you had the big break, had a pullback, nice pullback, another leg, another pullback, getting a bit more messy up here. You know, with those two weekly candles you got there, the big or whatever that was last time. You know, we had the big red one, and now we got a big blue one. So that messes up the picture a bit, muddies the waters, but the trend is still going. You know, it's
Yeah.
still up.
And hey, good morning, guys. And when you're
Hey,
talking about equities, good morning, Dale, Ryan. And you're talking about equities. I mean, we've been discussing this here on this show, and you know, if I'm not mistaken, Grega still feels he's, you know, if you look at ForexAnalytix, you just go to his wave counts, he's still looking for a wave 5 into new highs. Now,
Yeah.
this is to complete a 5-wave move. Now, that it makes a lot of sense too. I mean, if you think about it, like we're squeezing into highs, everybody's short because of seasonality or whatever,
Yeah.
presidential election season, blah, blah, blah. You know, we squeeze, catch everybody off foot, or, you know, wrong footed, which is happening right now. You know, we surge to 6,000 or 6,100, whatever the number is.
Yeah, I got out of my SQQQs yesterday. I gave it a chance and gave back a lot of profits actually.
Well, I mean, think about how many people like sold into September. I mean, you saw the over the last couple of weeks. I mean, why couldn't we hit new highs, squeeze everybody out, and then we really
Then
start to
puke.
see some market reactions ahead of the election
Election.
here going into November. Anyway,
Yeah.
just some thoughts, because like I said, it, you know, even Grega, I'll show you the charts in a minute.
Yeah, it's a beach ball. It was a
Yeah, it
beach
is.
ball for a couple weeks. Every break was well supported, just like gold. You know, they tried to hit it. And you know what, Blake, when the dollar is bad and you could be long. I challenge people to find something that is a short right now. Is it metals? Is it equities? Is
Just the
it
dollar.
FX? And that's really just, another long, actually, risk on. So now the dollar's acting risk on. So no, energy, everything. Uh, everything looks good. It's like everything goes up together, everything goes down together. It's just a difference of magnitude. It's still all one market, isn't it? I keep
It's
looking
still
for,
go ahead.
yeah,
It still
anyway, I
is, yeah.
just keep looking for differentiation and it just isn't there. So, there is no differentiation.
Yeah, I just thought I'd show you what Grega, you know, this is the wave count. This is what, you know, he's looking at. I know he's not here today, but we have somebody else that's not here too often, but he's here today. Let's see if
Steve.
Steve's mic'd up today. Steve, are you mic'd up?
Hey guys, good morning.
Hey,
Oh,
Steve Areno.
hey.
How have you been? How you doing?
Good to hear your voice, Steve. You know, it's funny. We were meeting with somebody from last week. He's like, "Oh, I remember your accent. You have
Oh yeah,
the greatest accent
Chris.
out there."
Yeah.
Russian.
So go ahead, Dale.
Oh, it's the Greek guy with the Russian accent.
Actually, the Greek guy with the Greek accent, but yes,
I
they
know.
they do sound similar.
Do they? All right.
The accent, the
Anyway,
English accents, yes, I would say they'd rather, they're rather close to each other.
You could definitely
okay, and
pass off as Russian. So Steve, what do you think about equities heading to new highs? I mean, are you a believer?
Um, yeah. Listen, my biggest problem with not being a believer is that, as I've been saying for a long period of time now, I do think that the dollar is not done moving lower,
Yeah.
right? So that, is going to be obviously a very good tailwind for equities. Now,
Yeah.
admittedly, the way we pulled back in equities, made me think that we can actually see another attempt to move lower, perhaps towards the 61.8 if we're talking about the S&P, so closer to 5,300 before we continue higher. But on the other hand, yesterday's move after stalling at the previous highs at the dollar is making me think that there is a very good chance that the dollar is going straight down for at least a lower low towards 100, if not lower than that.
Oh wow.
Um,
That's
uh,
you're pretty bearish the dollar. Now that's going into next week with the FOMC.
yeah,
Okay.
yeah. Perhaps the FOMC is going to be the catalyst, right?
Well, that's kind of the conversation I wanted to have with everybody here, because Nick Timros, or some of them know him as what's his nickname, Ryan?
Grasshopper.
No,
Timmy Leaks.
Timmy Leaks. Yeah, Timmy Leaks is he's out with his article yesterday, which spurred this whole discussion about is the Fed going to front load 50 basis points, which we'll bring in everybody else's opinions here too. K-Man, I know, probably has something to say about that. Ryan, I'll just stand by real quick. But maybe that is, Steve, the catalyst that drives the dollar lower next week, as you're pointing out.
Yeah, and or might even be a short-lived low, right? I'm a big believer that now that monetary policy is going to be moving, because definitely within the season that just started, I think we're going to be having a lot of volatility in FX, and the reason we're going to be having volatility is because of the combination of, one, central banks moving, two, central banks won't be able to coordinate in moving exactly at the same pace at the same time. Right.
Great point.
So, in my opinion, that has the potential of creating a lot of FX moves, some of them violent. So I think that for those of you that trade mostly FX, it's going to be an interesting year ahead.
Hell's yes, and I agree with that. I agree with that, Steve, and with your assessment. So I believe that this divergence in monetary policy is going to be huge. Speaking of which, and Steve, thanks for your input here. Let's kind of focus on the Fed going into next week. And let me ask K-Man, because we haven't heard him. I know you're still recovering, Cade, so I don't. You can
better.
Yes, getting better every day. How do you feel about the FOMC next week and the dollar, and where we stand with the central bank divergences between what we're expecting out of the Fed and then what we got from the ECB this week?
Yeah, well, first of all, it does look to me like a lot of players were just waiting for the ECB to be over to start selling dollars again, because it started. And I know people are talking about this Timmy Leaks piece, but that Timmy Leaks was an accelerator. It was not like the driver of the move. Move started earlier. Looks like to me like some players were waiting already to sell dollars, which we've seen with the break in some instruments like gold and silver getting back to the $30 zone. To me, the question is still an open question whether they do 25 or 50. I mean, so far we heard from Timmy Leaks, which is a non-voter at the Fed, although some people may think differently. We heard from Dudley, who would want to front load, who is an ex-Fed guy. So all the exes and all the people around have a lot to say. But if you listen to those who really spoke from the FOMC or the Fed, they don't seem to hint, or at least not to prefer, a 50 BPs cut next week. So to me, there is a chance or a risk of a 50 BP, but my base case would still be 25. But that doesn't change too much. I would say, well, we will always have pendulum swings if they only go 25, because, I mean, 30% or 40% of the market is trying to price in a 50 BPs, and people are buying downside on the dollar like crazy, like dollar yen and stuff. But so there will be a pendulum swing there if they only go 25. But to me, that's again, I don't think the dollar is dead for not at all. But we could see some moves. Obviously, if they front run, then people will remember the end of year 2023 and probably hammer the dollar more. But yeah, I've been short dollars. I am actually short dollars because I'm long gold and long silver. But there's some instruments that I'm starting to look at, perhaps to hedge a little bit against. Now, for instance, I was long Aussie, but I took my profit today because I don't think that what we've seen so far warrants a collapse in the dollar. It doesn't at all. but different instruments will trade differently.
Well, you know, the thing
Yes,
about
yeah.
all these dollar pairs, and as we've talked about quite extensively, I even made a video about it yesterday, is all the major flag patterns. And those of us that were picking up dollars, when on the short side, on these dips, whatnot. I mean, we are at pretty key inflection points. But I have to say, the biggest thing that I want everybody to respect is this move in gold. I mean, we talked about it at length yesterday, and the fact of the matter is gold is breaking out to the upside. A simple range extension, still takes us a little higher. So if you are a dollar bull and you're like, there's no freaking way the Fed's going 50, and you are planting in your heels and you're like, I am going to be getting long dollars for whatever reason, I would wait for gold to reach, near 2,600 first. I'd let it finish what it's doing, because while gold's in breakout territory, yes, we are at 161% extension today. In case you guys don't know, that was the last big dip we saw before we started seeing higher lows once again. We are at the 161% extension, but it doesn't, this is what, like a month of pent up energy that we're breaking out of. So you have to respect that. And like I said, if you're going to get it in the way and try to buy dollars, I would really wait until either gold breaks back below the breakout point, or it finishes the business it's trying to do, which happens to be a little higher here. So, and as we go out in the weekend, who wants to stand in the way of that? Like, if you're a gold trader and you don't have any data, I mean, we got University of Michigan consumer sentiment, inflation expectations, blah, blah, blah. Ryan, is there any other major data coming up today that you saw?
Import export prices, but that's small beans.
Yeah, again, major data, nothing coming up, right? So, like, if you're seeing the moves that are happening right now, who wants to stand in front of gold right now? Like, is some big player gonna step in and just start shorting gold at the moment? Probably not. And if you look at that gold move and you're like, okay, well, I don't want to stand in front of the dollar. That means probably anybody who's long dollars right now are probably like, yeah, I don't think I want to be longer right here. Maybe
Always
wait
long
till it gets
dollars.
back to support. So those are some things that I think we should be thinking about as we go into Friday. And what's going to stop the stock market too. Then that takes us into Friday, no data to drive the market. This is a conversation I was having with, traders in our chat room yesterday. It's like, don't stand in front of this. It's Friday. I mean, low volatility. It's Friday. Nothing's going to drive the market. No one wants to be on the short side as we go into the weekend within how far are we from all-time highs now, Dale? I mean, we are 2%, less than 2%, 1.5% from. Yeah, I mean, like, a hop, skip, and a jump from all-time highs. I wouldn't want to be short. So, those are things I think we need to consider going into this week. And next week, the conversation's all going to be about 50 and 25, 50 or 25, and how the Fed positions themselves going into the end of the year. And it's going to be a market mover.
He could go a quarter and then have a real dovish presser.
Yeah, I agree with that. I think that's a very, very distinct possibility, Dale. I think they are going to be dovish no matter what. They're going to set the stage for, hey, we're going to be cutting rates basically 2 full points over the course of the next 2 years, and they're going to start today, or
Harris wins and he keeps his job. I know there's no conflict of interest, though.
What do you mean?
Like the market being at all-time highs going into the end of October.
So that's another question, right? Here we are at all-time highs. The Fed and all other central banks globally are about ready to embark on a major loosening campaign. I know there's arguments out there that when they start cutting rates, typically stocks start going down, but it's under what circumstances? And right now they're loosening policy because it's just too restrictive. If they see a nominal rate at 3% or 3.25%, whatever it is, and we're sitting at, 5.25. I mean, they've got wiggle room.
This
They've
is
got a
your
lot of
melt-up
room.
move. You've been talking about it for a while. I think, all right, Greg is saying it's 5. A lot of people thought it was 5 before we had that little, fake out break. So the melt up should happen here in 5, the biggest moves at the end. So,
Is the biggest move a 3 or a 5? I mean, I don't know. I'm not
oh,
an analytician. I don't know.
3, but you could have, 5 be a blow off wave too. So,
Okay, maybe it could be an equal leg, which would be scary as shit, to be
Yeah.
honest. But anyway, well, hey, let's go around the horn. And I know, do you have an interview today, Dale?
you're my guest today.
Oh, okay.
Can you tell us a little bit about your journey, Blake?
We've got Steve here, so Steve could be our guest today. But let's
All
go
right.
around and let's just talk about everybody's expectations going into next week. So let's start off with Steve. Steve, next week, Fed, what are they going to do? Are they going to go blow it up with a front load of 50 basis points and look political and this is going to be Powell's last stand against President Trump and say, I don't want you in here. I'm going to give you 50. I mean, what do you think?
I'm not even sure they've decided yet, but the more the markets stay well bid,
Yeah,
the less the incentive to go very, very strong, right?
Yeah.
So it is a weird dynamic because it works in reverse, right? Meaning the markets initially started selling off because of the fear that the Fed is going to go strong. Now the markets seem to be complacent again, and they're moving higher. But the higher the move, the lower the probability that the Fed is going to feel stressed to push. Because as I've said before, unfortunately, in my opinion, the Fed supposedly has 2 mandates, but probably the third one that's not listed
it's political.
which is markets, which is the financial markets and how they're doing, is frequently the most important one, right? And financial markets are, just a breath away from all-time highs, right?
So he's not Paul Volcker, is he, Steve? He folded on inflation.
Oh, that's a given. Inflation is just a convenient excuse. It has always
He's
been.
Arthur Burns.
Just a reminder, right?
Yeah.
Inflation is currently roughly at 3%, right? Yeah, the latest numbers are a little bit lower than that, but it has been oscillating around 3% for more than a year now, right? What is this? That is supposedly 50% above target, right? Just a reminder, what was happening when inflation was at 1.4, 1.5%? So just 25% below the supposed target. They were stressing out at every single meeting how much they should fight to bring inflation at target. They were doing quantitative easing. They had 0 rates. They were even contemplating negative rates on occasion, right? And that just because supposedly we were 25% below target, right? Now that we're 50% above target, and we spent the last few years being multiple times above target on occasion, nobody cares about it. So persuade me that inflation is a real target and it's a real mandate and it's not just a made-up excuse for whenever it's convenient.
and there goes the debate. So, okay, Steve. So before we go
Volgy
back
for Fed chairman.
There we go. Before we go back over to Ryan, I know you say it's a tough call, but what do you think they'll do? I know.
I think there is a very good chance that they're going to do 50.
Okay. All right. So Ryan, what? Go ahead.
In my opinion, it's not just about that. The market is also going to react strongly to how they guide forward from there.
Sure. Yeah, their tone, like Dale said, it's
Yes.
like this could end up being extremely dovish, and that's why I think there is a big risk that the dollar takes a nasty spill going into after next week. But Ryan, what are your thoughts here?
I'm not sure how I follow that after that.
I know it's hard, right?
Difficult,
That's why
isn't it?
I'm pass it to you, bud.
Thank you. Cheers, mate. Yeah, I've always believed it should be a 25, but I'm still in the same boat, same as K-Man, and those sorts have come up over the last few weeks. It's a 25. It should be a 25. There's a risk that they go a 50. I don't think anyone who's been trading longer than 2-3 years should be surprised by any moves that come from the Fed. We played this game when they were hiking rates, when it was, are they going to hike 25 or 50? Are they going to hike 50 or 75? We traded through when Timmy Leaks dropped the bombshell that they were going to go a 75. So all we're doing is exactly the same on the way down as we did on the way up. So the risk here, the market is largely now siding with 25. So the risk trade is that they go a 50, and that's all you need to know going into the meeting. Okay, know where the biggest pain will come. It will come if they go a 50 and not a 25. And as Steve says, it's all about what happens in a 50. Likely sees them, maybe going on pause after. If they indicate another 50s to come, then that's going to kick the dollar in the nuts, because everyone will go, what do they know that we don't? The economy isn't collapsing. Why they want to cut 100 pips in 2 meetings or whatever. So forward guidance would be important, but our base case still 25, and keep a 50 on the table, because as we're just talking in the comments here with David, a 50 on the table loosens financial conditions, which does a rate cut job for them, just the same as they kept big hikes on the table and tighten financial conditions without needing to do the big hikes after a certain period. So it's all about those financial conditions again.
Right. Okay. Well, I'm going to go to K-Man, but I need to address something really quick. Forex Gal asked, where's Nick? Nick is actually in our community. If you guys don't know how to get to the ForexAnalytix community in our chat room, he's in here. He's not here right at this very second. He gets up usually a little bit later because he focuses on equities. But he actually, he's a very young guy. We've been kind of urging him to go, check out different, companies. He actually works for another company, but he's still in our community, and he's been in our community since for the last 5 years. So if you want to take advantage of being part of the ForexAnalytix community, this is the time to do it. We have our 8-year anniversary sale. These prices only come around a couple of times a year. And so when they're gone, they're gone. Everybody around here knows that. So take advantage of the pricing right now to be involved in our chat room. You want to, go chat with Nick. He's in here, and so we have one of the best and probably most active trading communities out there, bar none. And and there's several different rooms, chat rooms, trades rooms, news rooms, research, macro chat room, the Flownomics bar, as you guys like to call it, where they drink pints of beer at the same time when they're trying to talk macro. It's great. So make sure you're in there. All right, K-Man, what do you think about the 25 or 50? And Dale, don't worry, we're coming right back to you.
In a bit shorter terms, I think 25 and every meeting is live.
Okay, all right. So you don't think they're going to front load anything?
And that's going to be dovish enough, because the market has already done. Because you can say, if they go 50 loosening financial conditions, the market has already loosened the financial conditions for them. So I don't think they need to do 20. Personally, I don't think they need to do 50 BPs. Now, the 50 BPs will be the surprise trade, but I think 25 and every meeting is live. So that means that the market still will get a potential 100 BPs total for the rest of this year, and I think that's good enough for now.
Okay, all right. Well, Dale, we're gonna top it off with what do you think? What do you think?
Well, like I said earlier, Blake, if he just goes a quarter, it gives the market confidence that they're not worried about anything. And then the next meeting's after the election, and that he can't be accused of being political, and then he uses his bazookas.
All right.
So
all right.
the dovish presser.
Yeah.
quarter with a dovish presser.
I guess the
That's what I'm-
question is going to be, yeah, the dovish presser, which would lead us to believe that they will at least do a 50. So if the Fed continue, or excuse me, if the market continues to price, a full percentage point in 3 meetings after next week, that means that they have to do 50, whether it's November or December. So one of those would have to still be in play. And I think it's a tough call, guys. But you know what it's going to do? It's going to lead to a lot of freaking volatility. As Steve pointed out, it's going to be a crap ton of volatility next week. Next week is going to be, strap your seat belts on and strap anything else that you like to strap on. So, and get ready for some action.
I'm off next week, Blake.
You what? Ryan, come on, don't do that to us. I want to say, I'm gonna just leave us with a couple. I'm gonna leave us with a couple of things. I'm actually gonna be filming the week ahead video actually while we're live today, not live when the market's
Don't leave, bro. Ryan, please don't go.
Yeah, please don't go, Ryan. We're gonna strap on some stuff and have some volatility.
I don't want to know what you're strapping on, mate. Trust me.
Anyway, hey, I just want to say, as we wrap up the week, thank you all for obviously being with us and the ForexAnalytix team. We really appreciate your being here and your comments as we go throughout the week. It's always wonderful to hear from you at home or in your home office. But I also want to say, be respectful of what we're seeing here in the markets. I want to reiterate the breakout in gold. That's a big one, guys. And think about how this gold move is influencing, especially the dollar. Think about where stocks are at, and consider the fact that it is Friday. And as Dale, you always say, what do you do on Fridays?
Don't try and make your week on a Friday.
Yeah, I try to make my entire month on a Friday. Screw that. What? Just kidding. Guys, I'm joking. But yes, you're exactly right, Dale. Don't try to make your whole week or month or year on a Friday. I mean, Fridays are days that you have to just be aware that people are trying to, they're trying to hit the exits early. They don't want to stand in the way. The market's like, where's the momentum at? I'm not getting in front of it. So just be cognizant of that. And like I said, you got crude oil that posted a false breakdown this week. You've got gold
that was a good call by you, man.
Thanks, man. It's one that's
look at nat gas. Look at nat gas, bro.
I don't have it up there. Let's go over here.
So
you were talking about it earlier this week.
Last week it was the only when we were down hard. It was one of the. It's so simple, guys. You look on a big red day for what's green, okay? Because if it could do well on a day when everything else is being liquidated because of, some kind of, washout with margin calls, that's a tell. The market talks to you if you listen, and that means blocking out your narratives and keeping an open mind. But nat gas, we have a breakout here.
Yeah, you a little almost like a double bottom.
Yeah.
I mean, just from a technical point of view.
But we've beaten inflation. Let me tell you something. Grains look like they bottomed. Energy's going. Metals are going. What do you think Powell thinks about gold at new all-time highs? He doesn't give a damn?
No, it doesn't matter.
Yeah, he doesn't care.
Why would he give a damn?
I don't know. It's a lack of confidence in what it sure says. The inflation fight isn't over.
It could just be a case of the whole
system.
Yeah, the whole system, barring Japan, is lowering interest rates. So I mean, there is some logic in a higher gold.
Okay.
The thing is, though, I would also want to add on because you said don't stand in the way. Don't forget also Monday sessions in Asia. Since the start of August, we've had a couple of really dramatic sessions on the Monday morning in Asia, right? So just bear that in mind if you want to counter trade anything today, what the Asians might do coming on Monday, yeah? Especially that we're breaking higher in stuff like gold and things.
Yeah, the Nikkei looks lousy.
Yeah, it still kind of does. But look at China. Here's the Hang Seng. Now this is obviously the Hong Kong index, but here's the China 50. I mean, has this
ugly.
pullback been enough? After the rejection of the 78% retracement. I mean, do we try to create a higher low? I don't know. China looks like crap.
I want to make one point, and this week we had real-time examples. So if you're here in F.A.C.E and trying to trade strictly off of F.A.C.E, most of these moves, like yesterday, for example, happened after F.A.C.E. Okay, the euro didn't turn good or accelerate or anything until after F.A.C.E. So to really follow up on what we're doing here, all week the action has not been at the open. It's been midday. You had that midday reversal in S&Ps. So things are happening outside of F.A.C.E, and they're happening in the chat rooms that Blake keeps showing you. So invest in yourself. If you may not even need F.A.C.E and you're just here because you like hanging out, that's true. But if you need it to help you trade, you're really only seeing, kind of a section in time when major reversals and things and breakouts are happening after F.A.C.E. So why not, when you have a sale like this, get an edge and have a great, fourth quarter coming up. So
Dale, this I want to just share with you, like, this is at midnight our time, right? This is at midnight, like, and you just look at how you catch up when you're asleep and everything's happened. You come back over here and you just scroll through, see what everybody's been talking about the night before. I mean, it's the best way to catch up. Like, I would try to explain to everybody, as a trader of a 24-hour market, every day I get up. It's like somebody throws a jigsaw puzzle at me and they're like, "Hey, have fun. Here's your cup of coffee and, go put it all together." And I go through reading all these posts. I try to go back, read what everybody's been posting, go into the news and research room. Okay, what's been some of the major headlines, and because K-Man and Ryan are really good. And then obviously other traders too. They post things that they see, and it's like, that allows me the flexibility of catching up really quick versus putting on CNBC and trying to piece it all together myself. It's so much easier to go through and see what these guys have been talking about, consistently over the last few hours or the last 8 hours or whatever. I haven't been in front of the computer.
Yeah,
and
so you wouldn't have the edge without your subscription to ForexAnalytix.
That's correct. Fortunately, I've got mine comped, but yes. Anyway. So, hey, thanks, Coach, for guiding us every day. We appreciate you, and for those of you at home, we appreciate you being with us, and take advantage of this offer this month.
Yeah, and cooler weather is headed your way, Blake. So I think we made it. Usually it doesn't end till the end of October, but it's 70 here today for a high.
Yeah, and I'm actually heading to Northern Arizona for this weekend.
Oh,
so
cool.
Yeah, I might actually take a sweatshirt.
Yeah. Well, everyone have a great weekend. Thanks again for great calls, Kay. Great patience. You're an example to people that of being patient and not getting antsy in a range and having conviction about something. Grega nailed silver at, I think it was that day, Friday, when it was washing out, went to his level. It was scary. I saw his comment on Skype. He had intestinal fortitude on that one. And actually, there've been a lot of very good ideas here. So be long the world probably for another month or so. I don't see any shorts except for maybe banks. So have a great weekend. Don't just count your pips, count your blessings. Get in our community. Buy bonds look like they're set up for a reaction. Kind of counterintuitive with the Fed about to do something. But yeah, there you go. Yeah. So I wouldn't chase bonds here. anyway,
You know, I think
Jim,
they might have a little bit further to go,
yeah,
but
up there, 109, I think, is Welsh's potential target. Yeah, there, it's not a short, it's not completed, but he still thinks that when we get to these targets, wherever they are, that this is a wave 4. So what that implies is this just another bear market rally in bonds, with another decline to come.
I don't
So
disagree with that.
yeah, so there should be great markets to trade. You have interest rate volatility, you have political volatility. As long as the world stays crazy, there are trading opportunities, and I don't expect the world to get less crazy. So have a great weekend, team. Best team on the net, and our community. They're sending us articles, so we have a very, I think, astute community of real good traders, and it's nice to see you guys participate and want to share your stuff. So Ryan, I please don't go take another week off, and K-Man, I'm glad you're coming back strong, and Blake,
I
another
take the
great.
week off that, Dale.
Huh? What's that?
I take the week off that.
No, I will. No, yeah, you can.
Thank you.
Anyway, I'm glad you're feeling better. And Blake, have a great weekend. Thanks for all your great looks all week. And don't forget, don't just count your pips, count your blessings. If you're a trader, you are someone who has risk capital, but don't be foolish with risk capital just because you can afford to lose it. And joining this community is far from that. So that's a wrap, everyone. Enjoy the weekend. Football's back. See you Monday. We'll lay it all on the court and on the field again for you guys next week. Adios. See you,
Cheers,
Dream
Dale.
Team.
Thanks,
Ciao,
Coach.
mate.
Thanks,
All right, see you
Ryan,
guys.
K-Man.